Happy Friday. Brian Manning here with the weekly update. Let's get right to it. So, Tuesday this week we got CPI. So, CPI is the Consumer Price Index. There's really two major gauges of inflation. One is the PPI, that's the Producer Price Index. The other is CPI, Consumer Price Index. You've heard me talk about this before. We really think CPI is the most accurate because it includes living expenses and out-of-pocket healthcare. So CPI headline number for the month of April was down 0.8%. But if you strip out the volatile costs for food and energy, the core rate is what that's called. That's down 0.4%. So on a year-over-year basis, CPI inflation has moved from 2.1% to 1.4%. It's crazy. If you look back at some of my prior videos end of last year, there's a lot of talk about rate of inflation hitting the Fed's target of 2% and maybe needing to raise rates to curb inflation. And look where we are right now. It's crazy how quickly and dramatically things have changed. Wednesday this week, and every single Wednesday, we get feedback from MBA Mortgage Banker Association. Tells us what's going on in regards to new applications for purchases and refinances. So 4 straight weeks purchase applications for new mortgages are up, which is really great to see. Refinances on a year-over-year basis are up 201%. So certainly the refinance market is on fire right now. We also got a speech from Jerome Powell, very somber tone. And, I think one of my key takeaways from the speech was the concern that the lack of liquidity in this market could eventually also turn into solvency, meaning lack of liquidity could also then future equate to businesses or companies going out of business. So certainly a very somber tone. It's interesting, if you look at some of these top people, Dr. Fauci, Jerome Powell, I wouldn't say it's great sounding from them right now. Certainly not the case for everyone in the administration. It's strange to see such a disconnect from some of these really great, smart people and some of the rest of the administration. So it's just strange to see what's going on there. Thursday this week, we got some information from FHFA and Mark Calabria. So really good to see some forward progress there on forbearance. So it's not in place yet, but it's looking at an option that will come into place, which means if someone goes into forbearance and they don't have to make payments for 3, 4, 6 months, whatever it is. Right now, typically at the end of the forbearance, you have to pay back all the payments that you missed. Well, that doesn't really help you. If your mortgage payment is $3,000 a month, when you go 3 months without making a mortgage payment because you don't have a job, certainly at the end of 3 months, chalking up $9,000 under this example is not going to be a great option for you. So what they're looking at doing, and this is also working out for government loans as well, FHA example, but on the conventional side, they're going to let you potentially tack on the amount that you owe at the end of the loan. So that doesn't mean that if you have a 30-year fixed rate mortgage at the end of 360 months, it's now 360 months plus another 2 months or 4 months or whatever it is. What it means is that the balance that was put off through forbearance at the end of either 30 years or when you sell the house, that's just going to be tacked on to the payoff. So that's actually a really good way to do it. And it'll be interesting to see if they put this together, but it's looking like there's some forward progress there, which is really great to see. Also, every Thursday, we get new jobless claims. So that's how many new people filed for unemployment in the prior week. The expectation was that 2.5 million people filed for unemployment in the prior week, and it was higher than expectations. It was just under 3 million people. It's crazy to see a $500,000 miss there. What's even crazier is that not long ago, we were having unemployment claims averaging about 200,000 people per week. So we've gone from 200,000 now to 3 million on a weekly basis over and over and over. It's just crazy to see. Today we got retail sales, the worst number ever on record. Expectations were that retail sales would be down by about 12%, and retail sales were down 16% for the month of April. Not really a surprise. If you looked at everything in sales, the one sector that was up, online sales. Shocking, right? So really not the greatest economic data this week, unfortunately. We all know why. I'm around all weekend. It's really great to see the housing market opening back up. It's great to see realtors out there showing homes again. If you have any questions, give me a call. If you have any buyers that need pre-approval, give me a call or text me on my cell phone. I would certainly love to help you. Happy Friday. Hope you're having a great day.